Taylor Morrison reporting some disappointing results this morning. Those shares down about 2-3%. But my next guest is upgrading them and Toll Brothers to buy from neutral, saying the builders have priced in enough bad news. And maybe there's now room to the upside. Ken Zener is home building analyst at Seaport Research Partners. Ken, again, to go back to, I don't know if you heard Bill Smead's comments, but he said, to trade the builders, you're going to have to get in when the sentiment is bad and get out when the sentiment is really good. So where are we exactly in that swing? Still at the really bad part?
We don't think so. Thank you for having me on, Kelly. So we had been short the group from August basically into March when we began to rotate half our stocks to buys. Early pain, early gain is the idea that we used then. Today, we upgraded Taylor. Toll yesterday, Pulte more favoring the discretionary buyer and underweighting some of the margin pressure we thought might come out of Florida. So we are in a very constructive position, given that fundamentals often lag stock prices.
Can you talk more about Florida for a moment? Because what a different housing market it is now than a couple of years ago.
Right. I think the analysis that led to our short thesis in August was quite simple. The narrative was that big builders get better margins. That was not the case. Florida and Texas drove those outsized margins. By and large, we saw rising supply, with margins having come down a lot, not towards 2019 levels. That's very important. So the excess supply that we're seeing, especially through the census data, it's actually Florida's the worst, right? You have the HOAs, condo issues, but for new home builders, Florida is the most difficult margin market. However, the census inventory data we think is overstated versus where the public builders build, which is largely in the top 50 markets.
Okay, so bring this back now. You just changed Toll and Taylor to a buy. Kind of walk us through that.
Sure. The stocks are roughly 80-85% correlated. So if you don't get the macro right, you're in trouble. We switched our position back in March, going with builders that were generally larger, more entry level. But the fact was we were more concerned around that discretionary buyer, given the market volatility, and Pulte Taylor getting roughly 35-40% of their profits from Florida. That is a concern that we do not have today, given how we're seeing inventory and stabilizing margins. The declines are less. Orders, depending on the builders, are still, DHI was flat. Some are down 10-15%. But we see stabilizing fundamentals. And the key is this, Kelly. The stocks have been roughly 40% underperformance versus the market from their prior peak. That historically has only led to downside in 3 of the 23 cycles, which were the worst cycles in housing. And we don't think that tail risk is in play today.
Interesting. So do you think the worst is over for the Florida market?
It's going to continue to face margin pressure. I cover stocks, right, Kelly? So There's still a lot of supply. A lot of that supply, I would call those discretionary sellers that are going to fade away, ex the condo HOA issues. Therefore, excess inventory, both new and existing, is probably peaking, in my opinion, because the public builders have actually been pulling down their inventory, roughly 7% in the first quarter year over year, where the census data is actually showing up, upwards of 10%. So we're seeing a real bifurcation. So it's first a supply issue. You're seeing that result in less margin pressure. Yes, incentives are up, but the decline is not as great. And that gives us optimism around where the stocks have traded versus the market. And cyclically, while earnings are still under pressure into next year, given lower volume, the valuation should be expanding, which is pretty consistent with cyclical industry.